Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra, and this is a special edition of Market Today where we're going to be focusing on the Q3 earnings. The company on our radar today is Asian Paints, which has reported its numbers for the quarter three that's just ended. And the net profit has risen about 6.4% to over 1,000 crores. The revenue from operations have also stood at 8636 odd crore rupees. However, there's been a modest rise of about 1.3% on the top line as well. However, most of the street consensus estimates were higher, and the numbers therefore look slightly on the lower side of the estimates and have missed the street estimates on a wide variety of margins, revenue, and profit as well. But to give us more color on the earnings fine print, joining us now is the company's top management. Asian Paints Managing Director and CEO Amit Syngle joins in. Welcome, sir, and thank you so much for taking the time out for this discussion. Well, the street is slightly disappointed. We've seen the stock price also falling for the second consecutive day today. We did see that the earnings, I wanted to ask your view first. Have they come in line with your own estimates, or are they also below your estimates?
So overall, as we see the quarter, obviously, the quarter has been a little bit below our estimates in terms of from the overall, both the revenue picture to that extent. And this has come in obviously on the basis of a very, very high price increase base, which we had last year. So we have to see it in perspective that we have taken a 15% kind of a unprecedented increase last year, which had inflated the pipeline stock in the market to that extent. And we also had extended monsoon and a shorter Diwali in October, that compounding the overall demand conditions overall to that extent in this quarter. But what we have definitely seen is that in December, we have kind of logged in a double-digit volume growth, which kind of shows that the direction in terms of from the overall demand condition seems to be pretty intact in terms of going forward to that extent. We have seen a very strong improvement in terms of our margins. If you look at from a point of view of a gross margin, the gross margins have sequentially gone up by about 3.1%, and on a year-on-year basis about 1.8%. The PBDIT margins have also been very strong, almost at about a 4.8% increase sequentially, going closer to about 19.8% on a standalone business, and about a 0.2% increase on a year-to-year kind of a basis. So overall, I think the position on the margin front has been extremely strong in terms of what we have been able to see. Our industrial business has done extremely well. We have logged in double-digit growths both on volume and value on the industrial business to that extent going forward. And so has our institutional business in terms of what we have seen from a deco point of view. So there are definitely top liners which have done to that extent, but I think the industry should see it from the point of view of the net kind of 9 monthly kind of growth which we are seeing, where in the volume terms we are at about 13% and value terms we are at about 23% at the end of a 9 month period. So overall, I think it's a little bit of an aberration this quarter in terms of what we are seeing, and we don't see any other issues arising as we kind of get into the next quarter.
Okay, but vis-a-vis the industry also, when you talk about volume and value terms, I mean, has it been better or has it been in line?
We currently, overall, what we feel is that the industry growth would be in line with us in terms of what we have come out with to that extent. We have to watch and see in terms of what is there. But given the fact that the price increase base has been uniform for every player in the market to that extent, the volumes and the values would kind of get impacted in that zone to that extent. There could be a mixed difference, or there could be a difference with respect to the industrial deco scenario to that extent. But by and large, I think this seems to be the kind of trend this quarter in terms of what we are seeing.
Right. You know, why I asked you this was that one would have really imagined that the October to December quarter would have actually got you the surging festive demand and the wedding demand as well. Was that missing only because of the monsoon factor? Were there other factors at play as well? Is there an indication somewhere that the urban consumption is slowing down? And then, therefore, what could be the demand outlook going forward?
So there are two factors which are clearly emerging. If you were to kind of net out the higher stock, the higher inventory effect from the base kind of a zone, you will still basically arrive at about a 10 to 12% kind of a growth for the quarter to that extent, or even higher. to that extent. So I think some of the secondary demand variants are quite intact, whether it is the wedding season or whether it is in terms of the inherent consumption nature of the market in terms of what we see overall to that extent. I think the other impact was just because of a shorter Diwali compared to a longer Diwali last year to that extent, given the fact that there's an extended retail period you get in terms of sales, which possibly kind of affects the overall growth in terms of what really happens to that extent. But I don't think so that basically that there are any factors which have drastically kind of changed to kind of bring the demand conditions down. Yes, compared to the first half of the year, I think the buoyancy is a little lesser to that extent, relatively speaking, but I think the demand conditions are still kind of intact.
You talked about how your margins this time have around expanded on both the operating front and the gross margins front as well. But going forward, what could be the outlook for the future quarters?
So when we look at the deflation, this quarter has been in the order of about 7%. We have not been able to realize the full effect of the deflation, given the fact that we were carrying a certain inventory which was there to that extent. The entire effect will get realized in quarter 4 in terms of what we see, and therefore we expect possibly some incremental increase with respect to the overall margins, which will definitely happen in quarter 4 to that extent. The other thing in terms of what we are also looking at is that the product mix for quarter 4 would be definitely good in terms of going forward, in terms of how the demand conditions look, and therefore the combined effect should only kind of better the overall margin scenario in terms of what we see. We have maintained a band of closer to about 17 to 20% in terms of our PBTIT margins, and therefore we expect that we would continue to be on the higher side of this band as we kind of look at quarter 4 in the coming year.
Okay, you mentioned that the input cost pressures have eased, but have they eased as per your expectations? Do you anticipate further correction in the current quarter that we are in, the January to March quarter? And what would that mean then for the pricing trends for you going forward? We remember that most of the participants, including you, have taken consistent price hikes from May to September, but this quarter there's been no price hike. But going forward as well, what could the price hikes look like?
So first of all, I think we expect further softening of prices in quarter 4 to that extent. However, as a trend, what we are seeing is the softening of prices is not uniform across the RMs. There are certain RMs which are crude derivatives in terms of what we see, where there is possibly a higher kind of a decrease which is happening there. But in terms of some of the raw materials like titanium dioxide, which is core to the industry, we have seen lesser decreases which are happening to that extent. And therefore, what we see is that currently, while the trend in terms of softening will continue, but overall, we need to kind of really assess the scenario across the RMs to arrive whether at this point of time we need to take any price correction going forward. Immediately, there are no price decreases which are getting announced to that extent. And I think we will decide in terms of what we need to do well into the quarter after really kind of taking into account all the kind of reductions which are happening. We must also remember that the environment still continues to be volatile, and we need to be kind of looking at a slightly more stable environment in terms of taking any other calls in terms of how we need to look at the pricing decisions as we go forward.
But can we rule out the price hikes for now?
Definitely, yes.
Okay. And, when let's talk about your segmental performance, then, you talked about industrials that has done well for you. What about the bath fittings and kitchen? And also, if you could speak about your own decorative paints business too, which is your core business.
So when you look at the deco business, as I said, from the secondaries, it looks very, very strong in terms of what we have seen in December, a double-digit growth. All the areas of waterproofing, wood finishes, and the emulsions, I think, seem to be kind of really going well to that extent in terms of what we see from a secondary point of view of the market. The institutional market is quite good for us in terms of the way the real estate and the construction is panning out at the moment in terms of what we see. As far as the home decor business is concerned, yes, The bath and the kitchen business has been a little slow in this quarter in terms of what we see. They were also struggling with similar price increase basis to that extent. However, when we look at our other areas, whether it is fabric or whether it is furniture or whether it is lighting or it is, the doors and windows venture in terms of what we have kind of gotten, we see possibly still a good traction which is happening. Demand conditions seem to be fairly good to that extent in terms of going forward. So we see that even the industrial sector, I think for the last about almost 10 quarters, they have been doing a very strong zone. Auto was a little bit down, but now auto has also sprung back very, very strongly to that extent. And therefore, on the whole, across the various sectors, be it deco market, institutional market, industrial sales, or the home decor business, or even AP Global to that extent, I think that overall, we are pretty positive in terms of the quarter as we kind of look at it.
Okay. Could you share more about the Capex plans? You are now setting up new plan for in the home decor business. How is that going to be shaping up as we move along and approach FY24?
So we had previously announced an overall plan of about 6,800 crores, which included brownfield investments as well as some of the backward integration plans in terms of which were there. We have in addition now announced another 4 lakh KL increase in terms of capacity, putting another 2,000 crores, taking our overall investments in to about 8,700 crores. I think it is a fairly substantial investment in terms of what we are making, in terms of looking at accelerating our capacities. This is in line with our aggressive growths which we have seen in the last about 3 to 4 years of almost about a CAGR of about 12 to 14%. And therefore, what we see is that we would require these capacities in the next 3 years in terms of coming up. And therefore, that's what we are talking of, a very strong foray in terms of increasing these capacities. Our venture into backward integration will give a fillip in terms of some of the overall margins which we enjoy as we kind of go ahead to that extent. And therefore, we feel that these investments are very strong. And the good part is that all these investments are coming from our internal accruals. The cash reserves are pretty strong in terms of funding all these investments which are going forward. So we definitely see that we are on a good footing and good footing in terms of how we want to kind of go forward. And the 9-monthly results are, I think, definitely showing that the trajectory has been very, very strong this year to that extent.
Absolutely. Since you talked about the backward integration, there's been some concern that has been raised by some of the analysts who point out that, the increasing competition as to how could that really impact the earnings going forward. What would you really tell them?
So overall, when we look at some of these backward integration initiatives, these are of a very, very high stature and high technology to that extent. These technologies we have not seen in India to that extent. It is only held closely by some of the bigger players across the world. So we feel that the moment you kind of get into these kind of backward integration initiatives, the kind of overall cost effectiveness and the margins which you will kind of increase overall would be pretty good to that extent. And it would kind of give us a large amount of competitive advantage in the market in terms of how we can place our products, not only from a point of view of margins, but also bring about innovation in terms of what the customer sees and in terms of the expectations of really bringing about literally properties which have never been seen in terms of the paint market to that extent. So I think overall going forward, one is the whole aspect of innovation in terms of what we can control, because some of these backward integrations hold the backbone of the paint to that extent. And therefore, if you're able to do any changes in this, it kind of impacts the properties which kind of come out so that the innovation index kind of goes up. On the second front, I think the margin story, how it kind of really puts up acceleration onto it is also very, very strong. And we feel that both these are very, very positive impacts in terms of what we can make it onto it. Obviously, we'll speak more about it once these are kind of coming in line, because I strongly believe action would be louder than the words in terms of what we are saying in terms of going forward.
All right. Well, on that note, thank you so much, Mr. Syngle, for being with us and sharing all the earnings. Fine Print here is wishing you all the very best for the coming quarters and more interactions going forward. I'm looking forward to as well. Many thanks.
Thank you so much.
If you like the video, do like, comment, share and subscribe.